Good afternoon and a warm welcome from Melbourne this afternoon to the people profession, new opportunities for growth, our 2024 report on all things accounting and financial planning. As we start today, I'd like to acknowledge the traditional owners of the country where I am from and where we meet today. I'd like to acknowledge the Wurundjeri people of the Kulin Nation as the traditional custodians of the land on which I present. I want to acknowledge all elders past and present, as well as the future leaders who continue their role as proud custodians of the country they belong to. I'd also like to acknowledge our Indigenous customers and colleagues who join us today and acknowledge the lands on which you join us from today as well. Really exciting to bring to you this accounting and financial planning webinar, the results of a survey which many of our customers have contributed to, and of course some client profiles that we've included this year as well. Some administration, if I can, up front. We do have a live Q&A section. I'd ask you to use the button at the bottom of the Zoom screen that you're dialing in from. As best we can, we'll address those through today's conversation, but we have made provision to make sure that we can go through those towards the end of our conversation today. We've taken a little bit of a different approach this year, our third survey within the last 5 years, and that is I'm joined by Naomi Stewart and Philip Pleasant-George, both of NAB. A little bit about Naomi. Joined National Australia Bank in 2029. She's the State Business Bank Executive for ACT and Southern New South Wales for Regional and Agribusiness. She's also the Executive leading Professional Services Industry Specialisation across NAB for Regional Australia. Naomi has over 20 years experience in finance, investment and accounting. Started her career at PwC, returned to Regional Australia where she's worked in government for corporate advisory and in banking. And also a key feature of what keeps Naomi busy now, she's actively involved in the family farming, mixed grain and livestock business in southwest New South Wales, regularly mentors regional startups and has a particular passion for regional communities, agriculture and innovation. Naomi has a BCom from the University of Sydney, graduate diploma in applied finance and investment from FinCEA, is a fellow of the Institute of Chartered Accountants in Australia and New Zealand, and is also a member of the Australian Institute of Company Directors. Philip Pleasant-George is a client director with a specialisation in accounting and financial planning, who supports the growth of small and medium enterprises, specifically in those two industries. With over 15 years of relationship management and banking experience, he's got a deep knowledge of the professional services sector and is passionate about using his experience to see his clients thrive and succeed. He's got a master's in business in professional accounting from Victoria Uni and is keen to have conversations across the sector for anyone looking for growth opportunities and is keen to be able to support those. Just a reminder up front today, if you could complete the survey once the webinar ends, it really helps us stay on track with providing content that is relevant to each of you. We really pore over the results and make sure that we can build in any of the constructive feedback that we get as a result of our time together today. But let's get into it. I think a little bit about the report this year. So as I mentioned, the third report of the last 5 years that we've completed. A real broad section of respondents, revenues of $500,000 to well over 10. And given the change and probably some of the void that we saw in a perspective around financial planning, we were really keen to broaden our report out this year and specifically look at some of the challenges and some of the opportunities facing financial planning as well. So we're delighted that that not only are we including accounting this year, also financial planning, and this year we're looking at things on a metro basis and also regionally as well. If I move to the next slide. We start with drivers of growth. And I think what's really interesting and probably the key stat for this year is the industry is looking pretty optimistic about the future. If we consider, since our last report, which was right at the tail end of COVID, there's been a bit of settling down of some particular things since that moment. What we were probably pretty surprised with was that almost 60% of respondents have reported that growth in the last 12 months has been good or very good, and then in the upcoming 12 months, almost 80% pretty good or very good growth. And when we look at the drivers behind growth, and probably a key theme and something that we stumbled on pretty early when we started analysing the responses and we started speaking with our clients around their responses, was the title that we gave this webinar and this report this year, which is all about the people profession. We've heard through a number of industries, and particularly accounting and financial planning, that the availability of people and people with the right skills is almost the first thing that any of our clients speak to us about today. And what we have seen is that is translating through a number of actions that businesses are taking that is looking at their growth, either one, helping accelerate it, or two, is constraining it. But we certainly saw that the number one driver of all growth being the hiring, retaining of people, and also their training as well. I think the ability that we've had now that we've been running the survey over the last 5 years, and we're now able to create some longitudinal data, which means that we can look at responses to the same question over time. And what we saw as a result of that was just this real maturation of the accountant as the trusted advisor. If we cast our minds back to 2018, which is the first in these series of the reports, we found that about 77% of respondents at that time were providing some sort of virtual CFO business advisory capability. Now in our most recent report, we've seen that tip to 85%. So a real increase over time. And I think probably what we've seen as a result of that, and when we look at the good and the very good growth forecasts and the optimism that people are seeing in growth and revenues into the future, I think what we saw consistent with those that were suggesting or that were indicating that growth was going to be good or very good was a broadening in revenue. Not necessarily more clients, but absolutely more services to existing clients. And so really closely related to that, what we then saw was, do I have the people with the right capability in order to be able to deliver those effectively? I think when we consider that hiring, retraining, training of people, obviously it is much broader than the basics and the traditional view of compliance or a basic statement of advice in the case of financial planning. It was really focused on those skills tomorrow. And when we were able to unpack some of the insights of the report, there was a story that one firm shared with us around how they're putting training in place and who they're partnering with to spot those opportunities, particularly at the manager level, to be able to support their clients with chargeable advisory work. And so in this case, we've worked really closely with this firm in Melbourne, where we've gone so far as to run workshops across the manager cohort of this particular firm to help them identify opportunities to optimize working capital, for example, across their client base. We all know there's a cost of living pressure for many people at home. Certainly know that with rising interest rates and some other supply chain factors, that cash is absolutely king through a lot of the clients that our accounting firm clients support as well. And so broadening out that capability to be able to identify and deliver more chargeable advisory work was certainly something that was working for that firm. I'd point out that the report also references some perspectives from the CEO of Everperform. A shout out to Daniel Spitty, who runs that business, who really focus on establishing and managing performance frameworks for individuals in firms. And I think some of the perspectives that Daniel shared was really around things that those good firms have in common around identifying those opportunities to ensure that your top performers are appropriately challenged, but balancing that with them being worked out as well. But also what seemed to be the key opportunity was a real effective performance management, a framework for those that weren't performing or contributing as well in a firm. How that is delivered really then lead us to that point that the survey and that our client conversations established around the stressed accountant. So our key point number 2, we found that if I move to the next slide, about 60%, 69% of firms found people hiring, retaining, and training their number one challenge, which shouldn't surprise us. And what we also saw for the first time since we've been running this report is that the top 5 challenges, 4 of which included people and mental health, made its way in the top 5 challenges for the first time. So when we think about how firms retain their best people and create that high performance culture, certainly what came to the fore when we interviewed the respondents of the survey was growing careers. In the report, we briefly touch on Banks Group, a Melbourne firm, who have really taken a very simple philosophy for the way that they grow careers and how they retain their best people. And in fact, it's become an attraction mechanism within itself. A very simple theory that they have is that if you focus on careers where the individuals of a firm want to go, then there are opportunities to be able to commercialise that. And what Banks Group have done is created a PE firm as part of their business model. So what they do as part of that is they're connecting clients to investment opportunities. They're providing opportunities to extend the capabilities of the firm's best and brightest. So it's great for people for engagement and careers, but also great for clients in that they're having an alternate source of capital, but also a great opportunity for existing clients to invest in other clients within the firm as well. So really great for growing a new revenue source for that business. But of course, when it comes to what ideas or what opportunities that a firm is able to look at and help grow and help attract and retain the right people, I would say that what we learnt from the the survey and from our interviews with clients is there are as many approaches as what there are firms. What we did see in common, though, was that the best performing firms find their own way to tackle these challenges. They leverage their own strengths. They look around them. What is their client base? What sort of horsepower do they have in the engine room of the firm? Where do individuals within the firm want to grow their careers, and how can they grow appropriately? So they were the insights that we saw from the stressed accountant, which we always need to be mindful of. And a lot of those stories were quite inspiring to us around the way that we saw the best firms rising to that challenge, firstly acknowledging it, but then also rising to that challenge. I think something else that we've seen rising as well, and I'm delighted to introduce my colleague from regional New South Wales, is around the rise of the regional accounting practice. Naomi?
Thanks, Adam. I'm delighted to be involved in today's webinar, and certainly a lot of those themes you were just talking about there with the stressed accountant, we're certainly seeing replicated across regional Australia. As Adam said, I'm the State Business Banking Executive for ACT and Southern New South Wales, and I lead the Professional Services Industry Specialisation at NAB for regional Australia. The wider regional and agribusiness team includes 650 bankers in over 120 locations around the country. In many of those 120 locations, we have professional services accredited bankers. This means that no matter where you are in the country, there's a specialised banker who can assist your business. Regional and rural accounting firms continue to report strong conditions, and this is evident in this year's report. Firms have blossomed off the back of internal migration, strong agricultural production, and available technology. The positive outlook in regional Australia continues. In recent months, the regional property markets have returned to growth, with positive annual growth of 2% to the end of October. However, there are still clouds on the horizon, including staff shortages, continued higher inflation and interest rates, and challenging seasonal conditions for many production regions with the arrival of an El Nino event. Like many businesses in regional and rural areas, hiring, retaining, and training of staff is the biggest challenge for 71% of those surveyed regional firms. And this is reflected in a recent skills and recruitment survey by the Chartered Accountants Australia and New Zealand, which found that the highest number of vacancies were in rural areas across all of the states. Now, during COVID, we saw that people did flock to our regional centres, but many did also keep their city jobs and worked remotely. What we're seeing now is the workplaces are calling their staff back to offices in the cities, and we're at the point where people are deciding whether they want to move back to the city or perhaps transition to a job regionally. So it'll certainly be interesting to see whether regional firms entice some of those people across. To this end, our regional firms are pulling out all the stops, and they're using recruitment agencies and actively pursuing staff from big city-based firms. In order to attract the best talent, regional firms are starting early and thinking tactically. Retention is as much of a challenge as hiring, so clear career pathways and development are critical. Firms need to support their staff's ambitions. So this is starting as early as engaging with students as they leave school or even earlier, and educating them as to why an accounting career can be fulfilling, and then giving them flexible options like working part-time whilst they're studying. From there, we're seeing a real push to attract graduates from local universities, so offering things like cadetships and summer internships in order to make it clear that moving to a bigger city isn't the only way to advance their career. Other career-enhancing benefits of regional firms for an accountant who's perhaps early in their career can include better access to senior partners in the firm and other senior mentors than perhaps what you would get at a larger metro firm, and also more direct contact with certainly customers a lot earlier in their careers. Next slide, please. The report also highlighted more broadly that the most popular pathway for accounting firms to grow is via acquisition opportunities. However, only 50% of firms have a succession plan that's formally documented. More than a quarter plan to purchase all or part of another business in the next 2 years. And this is a similar number to those who were surveyed in our 2022 NAB Accounting M&A report, showing that firms have not been deterred by any economic uncertainty. However, the number of firms currently looking to acquire firms is double the number looking to sell. The other top priorities that the report respondents suggested were looking at cultural fit, terms of sale, and an acquisition that provided an opportunity to perhaps fast track an opportunity to move into a new geographical market. To stay competitive in a seller's market, the firms need to make sure that they've got everything in order before starting an acquisition strategy. That is beginning with their strategic alignment between stakeholders and arranging advisors and financing well in advance. Firms can also consider other opportunities. For example, there appears to be a higher proportion of regional firm sellers, albeit coming off a much smaller sample size, which does then present an opportunity for metro firms seeking to replicate their success through geographical expansion. Or perhaps considering an acquisition that has good synergies in complementary services, such as accounting firms acquiring a financial planning or broking firm to provide a further full suite of offerings. Now, Adam, I'm keen to know if this is reflective of what you're also seeing in the market, and I'd love to know from your perspective, do you think these customers are getting it right?
I think that, Naomi, what I would say is, again, around, there are as many models and approaches, the reasons behind buying as what there are firms, to be honest. So it's really mind-boggling the consistent creativity that we see in transactions from firms. There is no one way, that's for sure. But absolutely, I think several times a week, as professional services banking executive for Vic, we will see deals get done or conversely not as a result of cultural fit. So that is the number one thing that we think needs to be right, judging by the actions of our client base. Certainly, there's a lot of transactions around. I think that it wouldn't surprise you, as part of our due diligence, we will always ask a firm existing or potentially a new relationship for us, if they do have a succession plan and if they can talk us through that. The number of 50% feels about right for us, Naomi. I think if I unpack that a little bit, we're really lucky that we benefit from getting to know our clients really quite intimately and over long periods, and in some cases decades. When I think about one firm particularly that started off as a sole practitioner in a regional location, I can now fast forward 13 years and that firm now has 7 partners. The sole practitioner is now a minority shareholder, is all but retired, to be honest. But in terms of the decisions that they made over that 12-year period, that their value in the firm now at 20% is worth a lot more than what the whole business was 12 years ago, when that individual owned 100%. And over that 12 years has also benefited from the salary, the dividends, and now a significantly reduced workload as well. And so the way they did that was quite interesting, Naomi, and it involved a combination of many of the things that firms consider. There was initially some succession planning in terms of bringing on a couple of junior partners. It then went across into financial planning and brought it on a dedicated financial planning business with a partner, where that business was then cross-mining those opportunities across the financial planning and the accounting business. And then some pretty interesting approaches as well, that it now includes an IT capability and a data analytics capability that has given rise to more equity shareholders as well. So some really interesting approaches out there. I'd say that the thing that they all have in common, it just keeps boiling down to just people being on the same page with where they want things to go in future, and any acquisition or any merger opportunity, having a great cultural fit will absolutely seal a deal, Naomi. I think if we move to the next slide, and we look at financial planning, as I mentioned, I was really delighted that this year we're able to include financial planning, and the report goes into a lot more detail. Delighted to introduce Philip Pleasant-George, who is our Client Director for Accounting and Financial Planning out of Melbourne.
Thank you, Adam, and I appreciate the opportunity to be part of this webinar and specifically talk about the findings in the report about the financial planning sector. As Adam mentioned, I'm one of the client directors in the profit services space based here in Victoria, and I have the privilege to work closely with Adam and 12 other colleagues. Obviously, we have teams everywhere across the country, but I'm based here in Melbourne. Now, talking specifically about the financial planning sector, as of last week, there were just under 15,700 ASIC registered financial advisors in Australia, which is significantly down from a peak of almost 30,000 that we had in December 2018. Now, out of the registered advisors, we estimate that the actual practicing advisors would range anywhere between 8,000 to 10,000. We believe that the decline in the number of financial advisors is being driven by several factors, but mainly due to the increasing complexity of the financial services industry. Let's face it, after the Royal Commission, it hasn't become any more simpler for the advisor community. Now, the compliance requirement for planners have increased as well, and so has the cost of adhering to this compliance. Now, the aging demographic of the financial advisor is also another factor, with the average age of the advisor in Australia being over 50. Now, based on the long-term demographic trends, particularly within Australia's aging population, people turn to financial advisors and planners to help to optimize their finances and their super funds, since they're needed to assist individuals when steering through complex tax, superannuation, and regulatory requirements. In addition to this, we have more and more high-income earners within the community, along with growing disposable incomes, and this expands the pool of potential clients for planners. So, in a nutshell, based on the supply and demand formula, what we could find from the report is that the planners who are still in the industry had good revenue growth over the last 12 months, and almost 85% of the clients surveyed are expecting good or very good revenue growth over the next 12 months as well, which is better than the 77% number that we found in the accounting report. Now, the three main ways financial planning firms are planning to expand their revenue this year are firstly by hiring, retaining, and training staff. So several of my clients whom I've come across are adopting very good quality incentive programs to attract and then retain their staff in the long run. Firms giving equity within the practice for the senior staff is not uncommon these days, and also forms part of the succession planning strategy for that particular business. In relation to new technology and systems, increasingly we are seeing more profitable practices make better use of technology to manage clients, which includes workflows, automation, and outsourcing as well. Now, embracing AI and adopting to new technologies, helping advisors take the business to the next level. And we've seen a number of clients use Salesforce as their CRM, which is a great tool that can be customized heavily to the individual business to get the best output. Now, once we have the right staff and the technology in place, then this then allows the business to expand, and we're not surprised that a number of our clients are keen to acquire other businesses that would be a good bolt-on to their existing practice, which will then allow them to scale in order to meet the increasing compliance and regulatory requirements. Now, 49% of the firms who participated in the survey advised that they intend to purchase a parcel of fees over the next 12 months, while around 21% said that they would be looking to sell. And if you compare this with the accounting report, it only had around 28% of the firms looking to buy and 15% planning to sell. So the disparity between these figures gives us a picture of the financial planning landscape, where there are more buyers than sellers, and the purchase multiples continues to remain strong between 2.5 to 3 times. The number one priority for the firms who are looking to buy continues to be the terms of sale, for example, the purchase price, the payment terms, the availability of the vendor to stay back as an employer or consultant within the business, The other things that the firms are looking at when it comes to acquisition is the cultural fit, the speed at which the firm can increase the bottom line, and expansion into new geographic markets as well. Now, talking about regulation, this continues to be the #1 challenge faced by the firms these days, and everybody who participated in the survey pointed to this. And some of our clients believe that both ASIC and the government were putting it all on the banks and the planners without any liability whatsoever to the end customer. And now they've realized that they've gone a bit too far. So some of our clients are now expecting the current quality of advice review that is being looked at by the government to simplify some of these regulations, and in the process swing the pendulum back a bit. So the other main challenge is getting quality staff and attracting the best talent, which is very similar to the accounting stream as well. But there are green shoots in the horizon with increasing trust within the community, which will see more students electing to move to financial advice in the future, which will then finally inject fresh blood into the profession. So to conclude, Adam, the firms who participated in the survey remain very bullish about the future. The industry is consolidating by scaling up and adopting to new technology. And with regulations set to be simplified, the firms are forecasting brighter days ahead.
Fantastic, Philip. Thank you. And I know how much knowledge you bring to the financial planning space. That concludes the prepared slides that we have today. If we roll into the conclusion, I think what this report has demonstrated this year is that the role of the trusted advisor is more important than ever. Our clients believe, and we at NAB, believe that the importance of the industry is absolutely has faced innumerable challenges in the past. They're facing them currently, but what we see is a really resilient industry in accounting and financial planning, and that they always manage to find a way through to deal with the challenges that they are thrown. Notwithstanding, I'm not quite sure that we have ever seen such an acute challenge in the people space. I think the thing that makes us heartened is that we see such creativity coming out of the firms and the responses that we received, and the conversations that we have from our clients around how they are dealing to that to make their place of work more attractive, more inclusive, and providing some really genuine opportunities for career growth as well. And so it's not only the investment in technology and acquisitions and M&A activity. We all know that when it really comes to the crunch, that the successful firms are those that have amazing connections with their clients and are able to attract, retain, and grow the careers of their best as well. The report, of course, goes into a lot more detail than what we were able to share with you today. There is a short survey at the conclusion of our Q&A today. If you wouldn't mind hanging around, as I say, we do genuinely take that on board, and we really like to build that feedback back into our next webinar. But with that, Naomi and Philip, thanks so much for your contributions today. We'll roll into some Q&A. I know we have one, Philip, maybe we'll start with you, and that is a question just regarding financial planning, looking at acquisition of accounting books, and interested from, how does NAB look at lending to accounting and financial planners?
Great question. Thank you, Adam. See, we have policies in place whereby we lend against the actual value of the accounting and the financial planning book. And to give you some context, we've been having the same policy for the last 2 decades. So we haven't moved out from our policy in supporting the sector, and we've stayed the course even during GFC and recently through COVID as well. So we mainly look at three things when it comes to lending to the financial planning sector. Firstly, we look at the ongoing revenue of the business. We have a set multiple that we can lend up to. So to put it into context, it's 1.75 times, which is the maximum of the ongoing revenue that we can lend up to. And when it comes to the EBIT of the business, we lend up to a maximum of 3.5 times EBIT. And when you do the calculations of both of these, then we also need to cover the interest cover element, which is a minimum of 2.5 times. Now, when it comes to accounting, we basically look at interest cover and the EBIT multiple, and this is after we allow a standard wage to the partner, be it 100,000 per partner if it's less than 4, and 175 per partner when it's more than 4. So that's the basic formula that we use. We look at your historical figures for the last 3 years, and also look at the cash flows that you provide for the next 12 to 24 months, and base our decision based on those numbers.
Thanks, Philip. What I would say over and above that is that if you do have a scenario and you want to run that by your local professional services accredited banker, please do so. If you're still finding your way potentially, then please feel free to connect with Philip directly. He's on LinkedIn. You can connect with Naomi, and of course you can connect with me as well. I'm curious, Naomi, just in talking about regional firms, and I think it demonstrates from a coverage perspective, it's great that we're able to highlight both metro performance and regional performance this year. You mentioned that regional firms were looking for staff both regionally and in cities. Any other strategies that regional firms have in place?
Thanks, Adam. It's a good question, and certainly we are seeing regional firms become quite innovative with their strategies on how they're going to attract and retain staff. Offshoring has certainly increased across regional firms, so they're looking offshore where they can't find perhaps suitably qualified people in regional locations. The other thing that we have started to see as well is satellite offices based in more metro centres for some of our regional firms. And that's really I would say, a deliberate way to attract perhaps candidates who want to work still in a metro centre but for a regional firm. So we're seeing a lot more of those satellite offices. And the other thing that I would say, and I know both yourself and Philip have also touched on this, there is a really, in order to attract the best candidates, I think regional firms are looking at things like flexibility, which has become increasingly important to the accounting candidates. And so that's flexibility in perhaps location, but also flexibility in what their typical day at work looks like. So certainly the rise of flexible options, and also a real focus on mental health and well-being in the workplace. So putting incentives and programs in place in the workplace to look after staff well-being has been really important as well.
That's interesting. Thanks, Naomi. For you, Philip, there's questions around trends that you are seeing in market valuations, both from an accounting practice perspective and financial planning.
Financial planning has continued to remain strong. So as I mentioned, we've seen multiples ranging from 2.5 to 3.2 times. It also depends on the client base that you're looking to buy. So if it's a client that generates you just $1,500 or $2,000 a year, it's not really worth it, because the cost of compliance and to have that client might cost you the same. But if it's a client that generates you, say, 10 grand, then you're happy to pay 3 times for it. So it all depends on the client base. So if you talk about the average multiple, I would say it's still around the 2.75 mark. When it comes to accounting, as we saw in the slides before, there are a lot more buyers than sellers. So we've seen that multiple, which was around the 0.9 to 1 mark, push through that 1 number, and we're seeing it around the 1.2 multiple now. So that's anywhere between 1 to 1.2 times is what we are seeing as a multiple in the accounting space.
Thanks, Phil. But I certainly know that when it comes to market valuations, I guess in sort of around transactions. The other trend that we're seeing there is the ability to act fast. So the best terms won't necessarily the best terms won't necessarily secure a transaction, but sometimes speed can. And so taking competitors out of the market by acting fast is a trend that we see. And so I think what we see from a successful firm is that normally they've delegated responsibility of M&A to one or no more than two partners if it's a larger firm. They've got their DD pack sitting there ready to go. They know exactly what questions that they're going to go in and ask. They've done the work around their own succession plan. They understand why the M&A is taking place and how it will fit into their business as well. And so generally the most well-organised, the fastest, if finance is required, those that have organised their finance in advance or had that conversation with their financier or with their partners if they're going to put in additional equity into the business, those things being sorted out as well. And so what we find is that there are an increasing number of very sophisticated acquirers in the market. And so where I think we're seeing a natural tendency for the more demand usually would translate to more elevated asking prices, we're actually seeing sometimes that those asking prices aren't necessarily being achieved. And that's because of speed and other terms that a potential suitor is able to put forward as well. But I think for a more detailed conversation and talking about specific scenarios, please get in touch with Philip, Naomi, or I directly, and we're happy to have that conversation.
Adam, I was just going to say it's a really interesting point that you make, that speed is really critical for these acquisitions. Yet we see 50% of firms who don't actually have that plan in place. So I think, one thing, I would certainly be taking out if I was a firm from today's webinar, if I was looking to do an acquisition, having that plan in place and engaging with your bank early will absolutely set you up in the right position should you come across an acquisition that you need to move on quickly.
A question for Philip and Naomi, so you can figure out between the two of you how you would like to divide this. Are there special considerations we need to consider for small firms, that is sub 1 mil lending needs, or do the same trends and drivers mentioned earlier apply to those businesses as well?
You go, Philip.
All right, thank you. See, when it comes to small firms, the trends are pretty much the same. We haven't seen a lot of difference between the small or the big. The good thing is at NAB, we have a small business area which specializes in lending to the sector, and we can look anywhere up to $1 million in that space as well. So I know 7 other banks out there who won't do anything less than $1 million, but we are not like that. We can do the smaller ones as well. But when it comes to the specific policies, it's pretty much the exact policy that we look at for smaller and the bigger firms.
It's a good question. There's an interesting question here, actually, if there's been any movement in financial planning and accounting firms' sale multiples. That is, what are you saying in relation to these numbers? Is there still a large gap between the two industries?
I would say that the gap has slightly reduced because the accounting multiples have actually gone up. So as I mentioned before, we've seen it sub 1 in the past, but now we're seeing about 1, 1.2, 1.3. But the financial planning is seeing anywhere between 2.5 to 3.2. So there's still a big gap, but the gap has slightly reduced. That's what I would say.
I think that the most interesting insight that I've heard recently from acquirers and those that are really well organised is that they're valuing the business on what it means to them, not necessarily what it means to the seller. And so it sounds like a pretty obvious statement. But in the financial planning space specifically, if you're an acquirer and you've put a huge investment in technology in your back end, then the value that you put on any potential acquisition will really be about the value of those client relationships only, and that's it. So it's really about, if you're a seller, sort of thinking about, well, what is the buyer buying, and knowing that two buyers might be buying for two particular different reasons, and therefore they might be valuing that differently as well. As Naomi suggested, are you reaching into you're acquiring because you're looking at a new industry specialization? Are you acquiring because you're looking to move into a different geography? And so those acquisition reasons will translate to different values for different acquirers. I think there's a question about the case studies. What I would say, if anyone's interested in more detailed case studies, all anonymised, of course, as you would suggest, but we have many different versions of these. So please feel free to reach out directly, have a conversation with Naomi, Philip, or I, and we'll be happy to provide you with a case study and line you up with someone who can take you through it as well. Unless there are any further questions, I'd like to thank you so much for joining us this afternoon. If I think about Australia at the moment, there's a half a dozen different time zones. So probably well done for dialing in based on the advertised time. We're really looking forward to staying in touch with you with this report. I know that every NAB customer who's dialed in from their banker can expect access to a physical copy of this report that are available. We also have it digitally on our website at Business, Research and Insights, where of course you can sign up for all manner of insights, including markets and a number of the other specializations like health, agri, wholesale trade that can really help benefit some of the advice that you provide your business clients as well. I'd love for you to hang around for the survey, but for now, on behalf of Naomi, Philip, and I, it's goodbye.
Thank you.